And joining me now to talk more about this market, just a few percentage points from an all-time high, is Youngwoo Ma, Chief Investment Officer at BMO Wealth Management. Youngwoo, great to have you on the show today. Certainly a bounce back that we see this morning for stocks. What's your pulse on the markets?
Yeah, thanks, Kristen. It's great to be here. Well, there's a lot of nervousness still in the markets. It's nice to see a bounce back, but it doesn't actually feel like we're just near an all-time high. I think given the disruptions that are taking place, both with Doge and with AI, there's a lot of sensitivity to data, even data that might not have a lot of meaning or long-term impacts. The market can really be moved a lot, especially as we saw Friday, to the downside by data points which probably aren't all that significant. So I think there's an air of caution in the markets, an air of sort of show me or prove it to me, to see that the market can hold up well, that companies can continue to navigate through the disruption. But I think the underlying fundamentals are still good, but there's a lot of anxiety out there right now, I'd say.
Let's talk about some of the potential market moving events this week, Youngwoo. Of course, earnings season continues. We're toward the tail end of it, but we do anticipate earnings from AI darling, the only pure play on AI really in the public stock market, and that's NVIDIA after the close on Wednesday. What is riding on that report?
Well, I think there's been a lot of debate on how sustainable and durable some of the spending trends are. And I think that's what investors are really going to be trying to parse through the statements and projections that NVIDIA makes, is whether or not the hyperscalers are going to continue spending, whether or not these trends look like they're going to continue to last for years on out, or whether we're sort of past the peak or past the hump and some slowdown might set in. I think that's what the market will be looking for. I do think the trends are strong. Those are indications that we're getting. There was a big pullback several weeks ago based on that DeepSeek news, but when we step back and look at the continued spending, the continued growth that we see in these areas that are going to help to benefit companies like NVIDIA, we think that the trends still look in place and still look pretty strong here.
Interesting. Of course, the Fed's preferred inflation measure that hits Friday before the market opens, and that's the personal consumption expenditures index. Youngwoo, what do you anticipate that could tell us and indicate for the Fed's path forward when it comes to borrowing costs?
Yeah, we'll see how the data actually comes in. Certainly CPI came in a little bit hot. We think there's potential for the PCE inflation numbers to be a little bit elevated to the upside. But the Fed is probably on track to stay put for a while. We think the Fed might start to change its outlook in terms of messaging for further interest rate cuts once we get to mid-year, but that's really dependent on what happens in the labor market. We actually think there will be a bit more softness in the coming months in the labor market, and that will start to change the Fed's positioning and narrative a bit. But inflation, in terms of the temporary aspects of inflation, I do think the Fed is going to be diligent and thoughtful about separating out what inflationary impacts are temporary, such as egg prices from the bird flu, versus those that are more lasting. And we don't think there is a lot that are lasting here with the inflationary pressures. So we think the Fed will look past some of the near-term numbers, even if they are a little bit to the upside.
Interesting. So, of course, the Fed has a dual mandate. Inflation is one element. The jobs market is the other. And Youngwoo, you mentioned there that you're starting to see indications of some slowing in the labor market. I'm curious in terms of how the disruption in Washington, the layoffs of federal employees, factors into that.
It does factor into it, and the big question is going to be how severe the cuts are and what the knock-on effects are, especially to spending. Part of it is, of course, the immediate job cuts, but then the next round effects are how much spending gets pulled back and how that spending ripples through the economy. Of course, one person's spending is another company's revenue. So that could have ripple effects to the economy. So I think we're still in the early stages of how this plays out, and it's going to be a multi-month story, not just a multi-week story here. But it does play into the disruption. It does play into the prospect for some softness in the labor market going forward. But there's more than that. Even before this took place, hours worked had fallen for 2 months in a row. And I think we're seeing other signs of job openings falling and softness around the edges of the labor market.
It's interesting here, Youngwoo. The Wall Street Journal I recently ran a story noting how the U.S. economy is increasingly reliant on the rich. I say this, we've seen several consumer sentiment reports of late, but of course, the journal noting here that it's unusually reliant on rich Americans. Do you agree with that?
Well, that's an interesting question, whether it's more reliant than it's been in the past. It's always been somewhat reliant because the bulk of consumer spending comes from the upper income levels. So those at the lower income levels tend to spend essentially all of their income. So the growth or the drivers really are typically concentrated in the upper income levels. I don't know that it's much more a factor than it's been historically. Perhaps there's some data that points to that, but I think the reality is that for the economy to do well and move forward here, consumer spending is an important part of that, and business spending as well is an important part of that. I think those two areas together we need to focus on, and both look pretty stable here, I'd say.
Young Yu, during our interview there, we showed the first trade bell for Home Trust Bank transferring here to the stock exchange. There's a live look from the floor. I'm going to join those on the floor, including the CEO soon, for a deeper dive into what this means as stocks are fractionally higher in today's session. Young Yu Ma, Chief Investment Officer at BMO Wealth Management. Young Yu, thank you.
Thank you, Kristen.